My name is JNICC Dar, and I'm CEO and founder of Tanzania Digital Trade Agency. My career has been always with the UN Conference on Trade and Development, and that shaped my interest in advancing the digital economy in Africa. And this is what we are doing now, and also doing research, my PhD research in digital economy, checking the frontiers of regulation and regulatory framework. Thank you.
Thank you very much, JNICC. Thank you, everyone, for those inspiring introductions. So let's dive in. Let's dive into the heart of our discussion today. The pace of digital innovation, particularly in FinTech, and often feels like a high-speed train. And then you have regulators or the government trying to be the track forcing or paving the way for that. And as we can see, Tanzania, for example, our regulatory approach has been the sandbox. And Tanzania itself has launched its own FinTech regulatory sandbox in January 2025. So coming to you, Ahmed, your work with the Central Bank of Egypt, especially with the regulatory sandbox, is a beacon for many. You have seen how many, let's say, environments that can truly be shaped by financial services, with investments for startups in your sandbox multiplying 3 to 5 times. Could you share a key practical lesson learned from the Egyptian sandbox operation, perhaps a moment where a novel solution truly pushed the boundaries and required a creative regulatory response, and how this experience has informed or has formed a delicate balance between fostering innovation and ensuring financial stability for Egypt's rapidly expanding FinTech sector, now offering insights of which would be valuable to Tanzania perhaps and the whole lot of Africa. Please, welcome.
Yes, a very good question and very complicated, but I'll try to be focused. We can summarize learning lessons regarding to 3 main categories. The first category is at the stage where you are trying to issue your regulatory sandbox framework, or when you are trying to develop the framework you have already issued before. Sure, you have to be taking into consideration the nature of the country you are managing the sandbox in. So the sandbox framework should be tolerated according to the needs and the requirements of and the plannings of the central bank. For example, in Egypt, we are targeting to be a FinTech hub for Africa and the Middle East. So that's reflected in our regulatory framework, which include the availability of participating overseas FinTech startups, not only from Egypt, but we are accepting regional and international FinTech startups who is ready to be deployed in the Egyptian market, or they have this intention to be in the Egyptian market. Also, we are open with our continent and the Middle East area, so we are taking into consideration the concept of co-sandboxing. This is very important that you can make some kind of collaboration between the sandbox, for example, in Central Bank of Egypt and sandbox in Kenya or Tanzania or Nigeria. And we have already made this kind of collaboration. We have signed a FinTech bridge with Central Bank of Nigeria maybe 2 years ago. So the first lesson, the area of should be tolerated according to your needs. Be very, very conscious when you are developing the regulatory framework according to the capacity, according to the operating system, in terms also of the fees. And it should, you have a new rule as a catalyst for change, so you should put into consideration that to provide these services, it should be minimal cost, or we do prefer to be for free. that was regarding the first point. The second point, it maybe concern the operation itself and the approach of decision making inside the regulatory sandbox. Really, it's very, very tough job to adjust decision inside the regulatory sandbox. So our experience in the Central Bank of Egypt, we have formulated a FinTech Supreme Committee headed by His Excellency, Mr. Deputy Governor himself, and composed from all concerned parties to make sure that the decision is well stood from all the points of view we have, from cybersecurity, from digital payment, from financial inclusion department, from policies, from IT. So we have this consortium to make sure that the decision is being taken is well studied in this process. Finally, or the second lesson related to the area of handling the nature of the innovative FinTech activities and FinTech services. You see that maybe you have applied for the regulatory sandbox with one model. During the time being in the regulatory sandbox, the innovators or the entrepreneur, he is in a dynamic state of developing this activity. So you have to be good, you have to be very aware of the dynamic nature of the entrepreneurs and how they are thinking. They are running and we are running behind them. So this activity could be, in place. Also, we have one challenge in, for example, for regulating the ROSCA model. Do you know ROSCA model? ROSCA, Rotating Saving and Credit Association. That digital ROSCA was in the first time to be regulated in a central bank all over the world. So it was a very tough challenge to produce such activity and to produce such parameters to be included during this. And back to the last part of your question regarding to the balancing between innovation and the financial stability. Here I'd like to say something that to be in a central bank, you have a double jobs or a double functions. The first one, you have to be catalyst for a change, moving the innovative, moving forward for FinTech domain. But you have to be very controlled in such areas that is, we can say this is red lines. We cannot pass this. For example, the sandbox basically is based on the relaxation of some of regulations to make it more space for the FinTech startups to work in the local market without very sophisticated issues. So we have to differentiate between the regulations that can be relaxed and the regulations that cannot be compromised at all. For example, we cannot compromise with EKYC or KYC. We cannot also promise for all regulations and all parameters concerning consumer protection. So, to maintain the financial stability, you have to be very aware to what is regulation can be relaxed and what regulations that cannot be touched or cannot be relaxed at all. Thank you.
Thank you very much. So it's good to know that you are open to other countries to come and deploy in your sandbox. Lamek, coming to you from your vantage point in digital economy policy and legislative reform, particularly here in Tanzania. The digital economy is moving very fast. And what are the most significant challenges you see in designing and implementing regulatory framework for e-commerce trade that can genuinely keep pace with this innovation, which simultaneously ensuring robust consumer protection and market stability. Please, your thought from your workings with your institution and that narrative in terms of where we are going and where Tanzania is going.
Thank you. This is a very good question. And actually, Sunday is also a provocative question because of all challenges we are having in developing countries, and specifically also Tanzania. It's the idea of issue is a very complex task people are dealing with, from tax collectors and tax compliant. So digital taxation is adding even another layer to the already complicated thing. So in this way, we face actually two dilemmas. One, making sure that the country, as Tanzania, can actually reap the benefit of the digital economy development. In a sense that the digital economy development comes with a benefit. But at the same time, since in Tanzania the digital economy is still at a nascent stage, you need to nurture the development of the digital entrepreneurs. I once come across a very funny but very thoughtful saying on social media. There was a young lady who was saying in Swahili, for Swahili speakers, you know, I laughed and then it made me thinking so much. It was like, huwezi kunila bila kunilisha. And the idea in English that you can't take advantage, or you can't, I don't know, literally speaking, you can't eat me without nourishing me. But what does it mean? Having companies or digital entrepreneurs that are at a nascent stage, and then thinking of getting money out of them before assisting them so that they can reach a certain level where they are productive, is actually a self-deteriorating measures. 8 years ago, and this is a very a good example, especially in this. 8 years ago, we are facing with the proposals of e-commerce from the developed countries. And by that time, I myself was seconded from the UN to the South Center, which is a think tank for developing countries in Geneva. And luckily, we are proud that Mwalimu Nyerere was one of the founding pioneer of that center, which is a big think tank in Geneva. And by that idea, we are preparing the ministerial conference to be held in Buenos Aires in Argentina. And we were facing the e-commerce proposals from developed countries. And being tasked with coordinating the African group, because we work with the groups, African groups, so that we can have a common position to either discuss or not discussing these proposals. And one of the preoccupying question was, are we ready even to go to the table to discuss these e-commerce proposals? And of all questions that came to the forefront of our preoccupations was the tax. Like, we are going to lose a lot of revenues if we accept these proposals. People who were bringing their goods or offering their services, and they were being taxed at the border, now they can channel their goods, their services, without even coming physically in Tanzania. So you can see that in more developing countries, especially Tanzania, the most thing we are thinking of is tax. Taxing the digital economy, taxing, you know, and at the same time, the tax compliance is high, it's very complicated, and the rich people maybe who could have provided income and could profit, the developing countries could profit, for example, from the tech giant like YouTube, Amazon, all of these tech giants. Still, we don't have regulations that can capture the frontiers and the challenge of getting to get the taxes from this big tech. And then we are thinking to design the system that aim for these small and starting startups and digital entrepreneurs to get tax from them. So once we are thinking of legal and regulatory framework, it's actually very important to think of a balancing act. First, the complication makes a lot of companies go informal. Even those who were already formalized, they find it's a hassle to be compliant. Then at the same time, those who were motivated to be formal so they can develop slowly, they become reluctant. Like, how can I even advance to a certain point? So just for sure we'll come back to this to say it's a very complicated topic, because navigating through the need of digital economy, making sure that you protect consumers in this digital era, online consumers to be precise, at the same time that you nurture the small businesses that are actually building up on this technology advancement, needs a well-balancing act and thought and consultation for all key stakeholders to see what works and what doesn't work. Thank you.
Thank you very much, Lamek. That's very insightful. And I echo your sentiment in the sense that even at our law firm, so I head the IP and tech department, so we've been having issues as well when it comes to advising clients, and where there's a new matter, it becomes even difficult because there is no regulation. So how do you advise? We were talking the other day about the AI Act in the EU, where it's operational, but Africa is playing catch up. I know Kenya have done some strides, but Tanzania as well, I hear there's a strategy, at least a draft, but we are still playing catch up, whereby now there is a lot in terms of intricacies that could come with AI, with these language learning models, with the DeepSeek and the like, Gemini and whatnot. But perhaps, Fatma, you could also share with us, developing from what Lamek was saying, in as far as legal and regulatory frameworks are concerned. So perhaps you could share challenges from that front. But building on that, moving forward, perhaps you could answer both, because I would want to move to the next stage of our topic, where we speak of digital assets and taxation, of which he has touched on. But I think when we are looking at that, especially in Tanzania, and there has been development on that front, including a landmark case that came out. There was a ruling that came out on taxation and bitcoins and the likes. And we see that central bank is also, or most central banks globally, are also playing catch up. They're trying to see on how they can now navigate that space. And some have gone further. So the case, or the ruling that came out in the case of the Yellow Card Tanzania Limited versus Nyamwero, I think it was a 2024 High Court case, which was a game changer, and it affirmed that crypto transactions aren't illegal just because there's a lack of explicit regulation, and went further to where you have contracts and there are payments that are to be done with cryptocurrencies. That should be okay, because the parties have actually gone into an agreement, even though there is no rule or law, and BOT has banned, in essence, cryptocurrencies. So from your legal perspective, how does this ruling influence Tanzania's broader regulatory landscape and its future development of the comprehensive framework for digital assets, especially as we consider understanding and potentially integrating them into our financial system? So I would like to pick your brains on that, please.
So I think, thank you, Sunday. When we come to the regulatory side, I think in Tanzania currently we do have, I would say, like foundational laws on digital governance, or that provide some sort of, I would say, guidance. We have the Data Protection Act, which guides on how you collect, you process personal data, and in one way or the other, they do provide some sort of guidance, even when it comes to AI and the use of AI in the fintech space. I think the BOT has some guidelines on cloud computing, and all of this, I would say, laws and regulation kind of speaks to the regulation and the legal framework. However, I think there is actually a policy gap because there is no a specific law or guideline that specifically addresses the use of AI in the financial sector. We normally, I think, have clients who are building tools, but there is quite not yet understanding, you know, are there any standards that they do have to comply with? Are there any audits that maybe are required to be done in their algorithm, or things that maybe assessment of this system that they're being used. So there is actually a policy gap, I would say, that exists in the law because there is no a clear specific framework. But maybe with saying that, I'll also just shortly make a note that the law cannot always fix and address all the challenges that exist. And I think when it comes to technology, specifically AI, it's also even quite a big challenge, and that is why there's a lot of discussion on AI ethics, which I think speaks to, even when we're fashioning policies, do we want to regulate the system? Like when we speak about ethics, do we want the systems to be ethics, or do we want the people who are building this tool, the developers, the innovators, are they the one who need to be ethical? Because at the end of the day, it's them that are feeding this data into the AI system. Are they ensuring that that data is complete? Are they designing an AI tool by ethics in design from the beginning? Are they incorporating, ensuring that data is inclusive, and ensuring that throughout the whole deployment of AI system that they're doing it in a manner that is ethical, in a manner that is responsible? And so a lot of, I would say, even speaking about AI ethics, I would say into the finance sector, also speaks about having people who are building tools with ethics in mind and that understanding. I think when we come to the question that you asked with regard to the ruling that was delivered in the recent case of Yellowcoin, I think that was, I would say, like a landmark case. And I think when the case came out, we were also happy. People who are working, I think, in the fintech space felt like they now have some sort of guide or something that they can actually use to kind of say, okay, the court has actually declared that just because cryptocurrency is not regulated does not mean that it's unlawful. So unregulation does not equate unlawful. I think most of the people are normally scared by saying that it's actually illegal to maybe do crypto transaction. But when the ruling came out, it was clear that the court had said just because there is no law doesn't mean that it's illegal. And I think that ruling actually kind of also gave a recognition of cryptocurrency, I would say, and even digital assets. Because I think when the court makes such finding, it does show that the judicial, the legal system is willing and up to accepting digital assets and those related technology. And so I think that judgment actually calls for regulatory action, that the regulators need to come up with some sort of guidance and laws on how exactly to deal with digital assets and how they want to see them being deployed or adopted in the country. We already have a law that provides for taxation of digital assets that was passed, I think, last year in the finance bill. And I think that's the only time when we have an actual law that speaks to digital assets. And if you also refer to, I think the Anti-Money Laundering Act speaks about virtual assets. And so that's also another area where actually I would say like digital assets are actually mentioned. However, these are just, I would say, initial stages. There has to be more work that is done. There has to be a comprehensive, a very detailed legal and regulatory framework that ensures that people who are building these tools, investors who are coming in the country, are quite aware of how exactly digital assets is being treated in the country, and not just looking to tax whereby it's seen as if maybe the government just focuses on collecting tax and doesn't look at the other side of risk and liability that maybe they might be exposed to in the process. Maybe I'll end there.
Thank you very much, Fatima. So I appreciate your clarity in as far as legal and regulatory framework is concerned, and with FinTech, I believe it's high time, and there is an integration with AI, and a lot of that is going to come in the future. So I believe it's pivotal that we actually have something in the pipeline or some that will come out to cater for that space. And the other day we were discussing of even now, the good thing is that these discussions are there. We are talking of Bitcoin, we are talking how it's affecting, and we have come to know that there are countries that have their own currencies, digital currencies that are already in operation. So there is talk around there. So instead of playing catch up, perhaps we need to see and put policies into place. So I agree with you. And we're talking of, like, let's say the risk that would come with AI in terms of the high risk and the like. So I agree when we speak of these things, when we speak of regulations, ethics should be considered. And you spoke of digital assets as well. So we have seen with the Finance Act of 2024, the issue of digital assets came into being, where there was a 5% charge as a new tax on withholding tax, and on resident digital content creators, and 3% on digital assets transfers. So coming to you, Lamek, and building on that, what do you see in your practice with your agency? What do you see challenges in that front, in as far as digital assets are concerned and the taxation of it, and in the digital economy? You think perhaps there are key considerations for effective and equitable, perhaps, digital taxation within this rapidly expanding digital economy? Please.
Thank you. Indeed, a very important question. As at Tanzania Digital Trade Agency, we are now soon launching our product, and our product is actually focusing on cross-border payment only for micro, small, and medium enterprises, like really people who are at the grassroots of the business and who are actually nurturing our everyday life. You know, we are talking of border, we are talking of mamantilie, we are talking of food vendors, and all of these people you see at the border. Someone is in Namanga, is just selling karanga to someone from Kenya, and all of these people at the grassroots. But what is most challenging when it comes to the digital taxation is, again, the capacity to strike a balance between nurturing startups with protecting digital consumers or beneficiaries of the product or services in this digital technology. So, for example, if you say it's 5% for digital assets, you face several questions. And for example, how do you differentiate between those who have earn more or get more and those who are starting? Why can't we put differences so that we can protect those who are starting and nurture them, at the same time make sure that we tax equally or fairly with those also who have high profit? Also, when it comes, for example, in these frontiers, you have the challenge of double taxation, for example. You know, some services or content creators already maybe have been taxed by, let's say, YouTube or all of these who host their content. Again, when you want to tax them, you have to ensure that there is either an agreement, you know, there is you have established an agreement with those companies or those countries, so that you can avoid double taxation, or you can do it in a more fair way. So when we are dealing with digital taxation, it's really, you know, like worldwide, and this we all agree, worldwide, people who are paying more taxes are the poor. And the people who are pay less tax or even no tax are the richest. Why? Because the tax processes have been so complicated that to comply with the taxation needs not only time and money, but specific skills. So hiring tax advisors or these people who are going to do filing for your companies needs a lot of money. And those people who have money can even hire smart people who knows from the get-go to establish your company, where, when, how do you even might avoid taxes. So it's, again, as I said, taxation is already a complicated topic. Adding a digital taxation is even adding another layer of complication to the already existing complication. So it means it has to be well thought to the extent that you make it easy to not continue people operating informally. And also the last thing, it was actually very interesting to talk to one of entrepreneurs telling me that in Africa and also in Tanzania, once you want to start a business, and that's what he said, it really got me thinking so much, that once you want to start a business, if you want to go step by step and be formal and comply with the all needed procedures, he said the business is doomed to fail from the beginning. Why? Because it's so complicated that even people who were motivated to be formal, to formalize their business, it becomes hard. So we need people who can advise in a very honest and thoughtful manner the government and authorities for tax to make sure that this is where to get money, this is where to nurture so that you can get money later, and this is where to start to harvest now tax. So they can make this trinity of thinking while they are getting tax from those who are already making money and those big giant techs. They are also nurturing these smaller companies so that at the end they can profit. And they will end up making more money and getting more resources than killing the small startups already with heavy taxes. Thank you.
Thank you. Thank you very much. So I understand and I agree with you in the fact that taxation is one big puzzle for us to decipher. But Ahmed, I know in Egypt, at least the central bank has had stripe, and as a country, you have moved so far in terms of legal and regulatory frameworks, and in line with what he's saying here. I know that you have the FinTech Law number 5 of 2022, and then you have the banking law of 2020. But from your perspective, from Egypt, and narrowing down to what's happening, perhaps you can borrow a leaf or two. How are these latest FinTech-related regulations issued by the Central Bank of Egypt shaping the country's digital financial ecosystem, and what impact are they having on fostering innovation while ensuring stability and consumer protection from your perspective and what's happening in Egypt? Perhaps you could learn a thing or two from you guys.
Okay, thanks, Sunday. Really, I just wanted to declare that the Central Bank of Egypt has deployed its own fintech strategy, maybe since 6 years ago. And Sandbox was one of 32 initiatives that have been implemented through the strategy. Our strategy, indeed we can say that digital transformation or fintech in general, it cannot be handled by one approach. It's a multilateral approach issue. So as per our strategy, we have 5 main pillars. The first pillar was regulations. Under this pillar, we have some initiatives like regulatory sandbox and the initiatives related to issues and renewing the central bank law. and issuing the new law of central bank and regulating another fintech activities like we are now currently working on regulating alternative finance, and we are to issue the alternative finance and banking fintech related activities law. When it comes also, the second pillar is demand. We are working from our new rule as a catalyst for change. We are working to support the demand side from inside the central bank and inside the Egyptian market. So we have the most important initiative in this regard is a matchmaking program. The matchmaking program, we have a dedicated team. He is responsible to matchmake fintech startups with commercial banks to make this collaboration and to help both of them to provide more agile and more tech services inside the Egyptian market. Also, the demand should handle the national fintech statements and problem statements inside the Egyptian market. Also, we have mentioned the pillar of financing and funding pillar. So the Central Bank of Egypt has encouraged the commercial banks to invest or to make a fund to invest in the early stages fintech startups. And by the way, we have discovered now the capital of the fund exceeding 105 million US dollar. They have already invested more than $30 million in some of fintech startups, in most of them maybe in early stages. And we have noted that every one single pound or every one single US dollar we have paid from the fund, it attracts $5 from the foreign direct investors in this domain of fintech. So that's the importance of the funding. When the foreign investors see that the local banks and the commercial banks inside the country investing and paying, he is encouraged to pay more and more. Also, we handled the point of talent. People who are working on this domain, and we have made a lot of sub-sectoral initiatives directed to women. So we have provided Accelerate Her or Accelerate Her. So it's an initiative dedicated for the women, the entrepreneurs women. Also, we have dedicated to Phinology. Phinology is dedicated to the students of the universities. Also, FinTechers dedicated to the entrepreneurs outside the capital of Egypt, outside Cairo, in regions outside Cairo. So, through this comprehensive work, we can gain now we can say that Egypt, one of the most important hubs for fintech in Africa and Middle East. Back to your question regarding the progress in regulations and in progress in we are now currently working to issue the fintech and the records. Also, we are working on providing some supporting regulations. Now we are to issue EKYC regulations, Open APIs regulations, in addition to some other regulations we are under study now. So we hope, and hopefully, it will take the market more steps forward in the Egyptian market.
Egypt is moving very fast, I see.
Yeah.
Yeah, thank you very much for that.
That is the nature of fintech.
Brilliant, brilliant. So Fatma, developing on what you were saying, and you touched a bit on data, and we are talking about fintech but FinTech also aligns into when they are doing their onboarding of their clients, they do what we call sensitive data in terms of taking their biometrics and scanners and whatnot. In your experience, and you said you are from Tanzania Privacy Association, and you have helped FinTechs before. When you look at the Personal Data Protection Act and its regulations and its applicability, what challenges have you seen when it comes to helping your clients, knowing that they're also doing cross-border transfer of data and the likes? What challenges, and as far as most FinTechs that you have helped with, are facing when it comes to personal data, and how perhaps can they be able to now overcome that? Share your experience, and that's what most of the owners here, or most of the startups that can hear from you perhaps, and perhaps understand better in terms of how they can navigate that landscape.
So I think when it comes to the Data Protection Act in Tanzania, and especially for most people who are building fintech, I would say like the whole legal framework is still something that they said about cross-border data transfer. I think just recently I was speaking to someone who is building a fintech tool, and I told them if you're transferring data beyond Tanzania, the law requires you to notify the commissioner. And I think they were quite shocked, like, do you think I'm moving that data like physically? Because to them it's like data is just a click and it will move. What do you mean I have to notify someone? What do you need I have to do this? And so they kind of find the framework having a lot of like practicality challenge, because they're also not quite aware. So I would say when we come to maybe looking at what can be done, one, I would say also, we have the act, we have the regulation, but there's quite a need for guideline and explaining exactly how the regulator, or the Data Protection Commission, want the consent framework to be. Like, how should consent be managed? Explaining data transfer, like cross-border data transfer, what exactly measures do they want? And this is how it will give clarity to fintech companies who are building this solution in understanding clearly, I would say, the regulatory framework. But also, I think it's also for the fintech people who are in this space to actually understand that the data protection is not there to be a burden to the business. It's actually there to ensure that we have a sustainable, a trustable ecosystem, because we have seen how digital lending in Tanzania has actually resulted into a lot of problems where people's data were misused, and there are a lot of cybercrime, identity theft that are ongoing. And so there is actually a need to protect that data. If you're collecting anyone's data, you need to be accountable, you need to be responsible, and you need to be transparent about how you're handling the data. So I think the fintech innovators need to understand the law, need to see what is the purpose and how they need to secure the data that they hold. I think one of the things when it comes to the fintech, to the financial sector, we already have a data localization requirement whereby people who are financial service provider are required to have their primary data center here in Tanzania. And so that speaks to data sovereignty, to kind of maybe build onto that. But I think there's quite a lot of awareness, there's quite a lot of regulatory effort that have to go to fashion the framework that actually works for fintech. I think the fintech also sector collects and processes a lot of data, and also sensitive data. We now have a lot of app whereby the KYC is just to scan your fingerprint, but this means someone has access to your fingerprint, and that is data that kind of requires very higher protection. Even when you read the law, there is quite stricter requirement for sensitive data when it's used or processed by anyone. And one of the law says if you want to use someone's sensitive data, you would require to obtain prior written consent. Specifically, it says prior written consent, with exception to a few areas that are excluded. But that speaks to how the kind of strictness that is required. And maybe in Tanzania, if you're processing child's data, that also falls into sensitive data. Most people and most people who are in the space normally don't know that, but if you're collecting a child's data, be it maybe their name, their age, their sex, that's already sensitive data. And so it does require protection. And so I do believe that the Commission is working toward consent guideline and cross-border data transfer, and we hope to see that there are actually more guidelines that are given in order to ensure that fintech companies are able to build with clear understanding and ensure that they don't end at the side of being fined or maybe being dragged to court, because that's also a legal risk that they will be exposed to. Maybe I'll end.
Thank you very much, Fatuma. And yes, you spoke of the primary data center to data center in Tanzania for fintechs. When you are applying for your PSP license with BOT, it's a requirement that you have your data centers in Tanzania. And you spoke of the fact that and I think most perhaps don't know what she was talking about in terms of data protection. There is a PDBC, the commission that is based in Dodoma. So for fintechs, please perhaps see lawyers like Fatuma, perhaps come see myself, and then we can give you guidelines in terms of personal data protection, because it's very prime and most are not looking into. But I believe you have to, because I remember the deadline for registration were April, but still it's open. You still can do, because there is no enforcement has started yet. But the fines are hefty and the repercussions are very, very high, because they are using data every day, like what she was saying. You are taking biometrics, but still the likelihood of them being abused is very high. And they have a right, for example, to have them ask their data to be removed, so things like that. But we spoke of that, we've spoken of AI, we've looked at the central bank in terms of the sandbox and what they're doing now in Egypt and what's happening in Tanzania. But as we are coming to the end, I believe, if I'm to go back to you, Lamek, in your practice, especially in the digital asset or digital ecosystem, digital economy, what perhaps do you think, or what do you believe to be imperative for governments and regulators to foster an inclusive digital ecosystem that effectively brings in SMEs and rural population who are increasingly adopting digital payments, and at the same time building a robust consumer confidence in digital platforms, as we're discussing towards what now the BOT has done in Tanzania. They are doing a good job, but still in terms of inclusion, in terms of what the government should do in your space, in your research, in advocacy, what do you think needs to be done for regulators?
Yeah, I think the most important thing, we need to foster a honest conversation between the digital entrepreneurs and government authorities, especially those who are tasked with taxation issue. Because for me, it seems like there is the missing and the misunderstanding between where to collect tax and where actually to nurture so that after you can collect a tax. So, for example, if you have, let's say, an American artist who is profiting from Tanzanian consumers, how have you strengthened your legal and regulatory framework to make sure that this American artist, as he is reaching Tanzanian consumers, can pay his or her share tax because he's accessing your market? And then maybe use that money you collected to nurture the startups, your homegrown startups, so that after you can tax them. Fatuma, my colleague here, was talking about data protection. The whole issue of striking the balance. The data is sensitive. People call it the new oil. How do you balance that you can share the data to facilitate or enhance the service provision? Because as now we talk, perhaps Google knows in a village X in Tanzania, people are good in a certain subject, or people prefer this food. So once McDonald's comes to establish this fast food, they know exactly where they are going to establish that specific and what they want to sell more. They know that these people, they like this kind of chicken, this cooked this way, because they have collected, processed, and turned this data into business model that they can build their business based on that. How do you make that those people accessing data can pay their share tax as needed? How do you make that you can protect your startups, you can protect your digital entrepreneurs, at the same time getting tax to fund social services in Tanzania? So for me, it means that we need a honest conversation, we need a multi-stakeholder consultation, we need to have a discussion that this is where money is, and this is where you could get money in 3, 4, 5 years to come. So get money here, which actually we end up getting more money, and nurture, protect, and assist these startups so that in 3, 4, 5 years to come, you can get money. Thank you.
Thank you. Yes, if you can add on, and then I'll allow Fatma also to add on if you have anything to say.
Just a quick comment of what Ahmed has mentioned. We have this kind of experience in the Egyptian market. So the central bank have deployed a program, a roundtable, periodically roundtable program called Here to Here. So that is to reinforce the direct conversation and the direct dialogue between all the ecosystem and the regulator and the governmental side. That, and after that, we have really pinpointed a lot of problems that we shouldn't aware of. So just like my colleague have mentioned, Ahmed, that we need these practices to be more and more entire our beloved continent. Thank you.
Thank you. You have anything to say on this or anything else that we've spoken about, Pastor Touch base?
So I think what Ahmed is speaking is quite important, and I'm so happy to see the regulator speaking with so much passion on what has to change. I think critical thing, we all agree that we do need, I would say, a multi-stakeholder approach and collaboration. I think that is going to be critical in this AI development. And I think this means that the regulator needs to be able to understand and see the innovators' challenge, to carry them and address them. And I think for this to happen, it's going to take the regulator working closely with the fintech companies or people who are in the space to ensure that they're able to address their challenge, I would say, in a timely manner and very responsive. And I think because technology is moving quite fast, and so there's quite a need for that. But he also spoke about how we can protect our data. And I think data is, when we speak about AI, data is behind it. And it's the most important thing, I think, in building this AI tool. And so kind of understanding how we can make data work for our communities, that we're not just giving out data, that this data is actually possible to work to our benefit, to solve our solution. I think most of the people who are in innovation in this space, they will tell you like access to data is a challenge, you know. It's also costful collecting data from scratch. So there has to be intentional effort on how we can create data flow in the country, on how we can enable these startups that do not have the muscle, the capacity to maybe access certain data that maybe are sitting with public institutions, and fashion an open data framework, I would say, for innovators to be able to actually access that data. And so I will end there, but I think there's a lot that can be said, and I want to believe that BOT is here, and they will ensure that we have the future that we want and envision.
Thank you very much. I agree with you. There's a lot we can talk about, or we should talk about, but sadly we are out of time. And MC, perhaps we can open to at least 2 questions the floor, or 3 questions, and then we can call it a close.
All right, so you need to be brief with your question. So 1, can I get another one? Or if that's the only one, then we're done. All right. So I have 1 question for you. Oh, 2. Oh, goodness. Okay. Let me first give it to this gentleman. Please, can you pass?
Thank you. My name is Medi Kibindo from Wamacha Credit Tanzania Limited. My question is, how do you balance innovation with compliance and customer trust in financial technology? Thank you.
My name is Paul. I'm a digital builder. So I'm trying to paint a real-world scenario in context of the conversation. So suppose I'm an AI FinTech entrepreneur building an AI-based solution. Now with the legend, if I have to get a written consent, I'm just speaking about the practicability. So in that context, does it mean we should not innovate, or where do we go in that scenario?
All right, thank you. So over to you,
Thank you.
well-able panelist and then coordinator.
Thank you very much. Thank you, lovely audience, for those two questions. So, Lamek, you take the first one, and then you can go on the second one. You want to start? The last question. You do the last question. Yeah, consumer trust, will take it. And then you can do the data protection and cross-border. So,
Thank you. Remind me again the name, the first speaker. The first question on balancing innovation with consumer trust. Huh? Yes? Hamed? Okay. So thank you so much, Hamed, for the question. We go back on protecting consumers, because actually, if you ask me from my experience, this is actually where regulations should be. That is actually the first essence of regulating. That we cannot leave the digital economy being run as it is. You know, it should be regulated. But the first essence of the regulation, it should be to protect consumers. It should be to protect people who are interacting online. For example, nowadays, there are a lot of entrepreneurs, digital entrepreneurs. Even TikTok, someone is producing the song and then is paying a singer or a dancer to go to dance that song so that it can pick up the trend, and then the song can go viral, and then it's easier for that song to do better in the market. But imagine a young lady going to sing, is working, is an entrepreneur, is selling the skills and services, going to pick up the trend of that song, and then coming anyone online and try to troll that lady, or body shaming her, or just giving a comment which has nothing to do with what she's doing. So that lady is going to be discouraged first, and then she's not going to profit from a digital economy. But once you have regulations and policies and laws that protect people online, so that they can have confidence, they can have trust to engage online without any fear, that's where we start to build a digital economy. So the innovation should go with the trust, and the trust comes from protection. And also, together with the digital literacy. You know, we lack digital literacy, and most of digital users are not equipped with the digital literacy. So we cannot protect online consumers or beneficiaries of digital economy if we don't have regulations that can be enforced. And actually, having regulations is one thing, but enforcing those regulations is something else, and even more complicated. We were doing the study of private sectors in the digital economy in 43 countries. But one of the biggest challenges was that laws are there, but enforcing those laws and actually applying penalties for people who are breaching those laws becomes so difficult, because first of all, you don't have authorities. Authorities are not equipped with the resources to enforce those laws. So for balancing innovation and trust, you need to be able to have those laws, enforce them, and actually equip law enforcers with resources, including, of course, education, awareness, and money to enforce those laws. Hopefully, I have responded to your question, Ahmed.
So maybe to just briefly add on to what he's saying, I think in the Tanzania area specific, I think we lack consumer PR. You know, like in other jurisdictions, when a regulator finds someone, it's out in the public. You wake up tomorrow, everyone knows a certain bank, a certain fintech has been fined. And that, what happens, it actually builds trust in, I would say, in the, to the public, because they do know that if someone does something wrong, I'll be able to go to the regulator and they'll be fine. It also sends a message. And so I think there has to be, I would say, more consumer PRs from regulators in building a trusted ecosystem, especially in the financial sector, because I think trust is quite delicate in this area. With regard, I think, to the question on consent, so please do not mistake that you're not supposed to build or innovate just because of the challenges of related to consent in data protection, but there are actually mechanisms or tools that are available. I would say one, you know how they are actually, maybe when you're enrolling into something and then there's a place you can click to consent, but is there an audit trail that can actually prove someone consented? So I'll take an instance. There is a specific product that I had used, and to me, I didn't think that I had consented. So I went to them and told them that I never had agreed to this kind of services. You enrolled me without, and they told me, like, you did enroll on this specific day, on this time, at this, and so I sat back and really started thinking, okay, maybe I did consent, because they were able to actually show to me, like, and tell me exact time, exact date that the consent was actually given. But there are also consent management tools that I think are actually available that can be used for such instances. And so there is a lot ways in which you can actually build into that consent framework into. So I think I was saying, like, there's a lot of ways in which you can actually keep consent into your system and ensure that it's able to be proved. But a big part of it is actually also being able to provide privacy notice in a manner that's clear. Because most of the time you'll find someone saying, so I did consent, but when you look at how the data is being used, or maybe they're being bombarded with marketing, they're like, it didn't say that I'll be receiving some marketing from them. Like that, that part just told me, click here to consent. But there was no information on maybe how, if there would be marketing received. There is no information on who is going to receive the data. I just realized my data, I think I've seen certain type of product. I go to like a petrol station, and then I immediately receive a notification from an insurer that I've been covered. I'm like, who gave the insurer my information, my number? Did I consent to this? And so that's just an example, but it speaks to, like, similarly to when you speak about consent, it has to be quite informed, it has to be explicit, and it has to be provable, like, in order for you to be able. So please innovate and please build those solutions.
Oh, thank you. Just to add on, I think he asked also in terms of when you have an innovation, but it's a requirement when you go for your PSP license, you're supposed to have local servers. They have to be here. And I remember we had about 2 applications that were rejected because you don't have servers in Tanzania. So that is prime. Even if you are doing your AI integration and whatnot, it's important that for your fintech to have the servers here so they can look at the data for security purposes and whatnot. But we are talking of the sandbox in Egypt. In Tanzania we have as well with BOT. So I would suggest that perhaps if you have a new kind of platform that you think perhaps it could get you into issues and there are no laws to protect you, you could go to that regulatory sandbox, you could apply. I think this year it was in January. I'm not sure when they are taking again, but still I'll say that could be the proper route for you to go and say, perhaps I have an innovation, I have a fintech product, but I don't see on how I can protect myself, but I have this and that interest. So they will review that, and perhaps you can take on board from there, if that makes sense. So I believe we are out of time, but thank you very much to my panelists. It's been very insightful. Thank you very much, and to the audience as well. I wish you a lovely day. Thank you.
All right, thank you so much. A round of applause for them, and they will take a group picture before they leave. So please, kindly step forward so you take a group picture and leave, and then